good, trading fam? Back here with another video. Overall, it's been some time since I uploaded. Just want to get resituated again and have to focus on my trading journey myself before I can continue videos. In the last video, we picked up on learning the beginning steps of market structure and how the markets move and works. This video is a spin-off of the last video, and the following videos have this one be spin-offs as well. I advise y'all, actually not advise, but please do take notes. Take notes during these videos. And this course is meant to be not necessarily hold your hand type of course, but more so a course where I show you the ins and outs of the markets and allow you experience and trial and error and study for yourself what works and what does not work. So you will not learn anything if you do not go and do the homework or take notes. So please take notes. All right. So beginning the video, we're going to be discussing time frames, ranges, and fractals, the definition names of all these and what they mean. So to start out, to go in depth all these, I'm going to break down what time frame is first. So time frame, I use the definition right here, time in between the start and close of the candlestick. So basically, with that being said, the market's closed right now, but I'm going to show you one example. Let's go on, actually, we'll start here. So that's one candlestick. So basically, because we're on a 1 minute time frame, you see up here 1 minute. The candlestick closes down here, but starts up here because it's a down close candlestick. So 1 minute, open, close. This is a bullish candlestick, as we discussed in the last videos. This opens up here, down here, and closes up here. So it'll be the same thing if you keep scrolling all the way down. Now we're in a 2 minute time frame. So the just same thing I pointed out. It takes 2 minutes for a full candlestick to form. These bars right here. 2 minutes. And you see right here, 3 minute time frame. It takes 3 minutes, 5 minutes, and so on, all the way up to the weekly time frame. This is the weekly time frame for the W's, as you see. And this is what a weekly time frame looks like. So weekly, daily, 4 hour, 1 hour, 15 minute. And as you see, all these just winds up being more and more candlesticks, and they create, in return, a overall view of a higher time frame of what that candlestick looks like if you dissect it down and take all the guts out and just dissect that candlestick. That's what you get when you go down throughout the candlestick time frames. So, without further ado, that's what time frame is. Ranges. Now we have ranges. Ranges is what I discussed before. This takes a little bit of math and just understanding of what a range is. So a range is basically the first candlestick to last candlestick within that time frame. As we discussed before, the trading and charts move within time frames. Oh, by the way, I'm going too fast. Please slow this down. Please take notes and just, be able to understand what I'm saying, because every video after this will keep progressing on. So if you do not get the first video, keep rewinding it and keep studying it for yourself until you do get it. Everybody's learning curve is different, so I'm going to try to, work with people's different learning curves. So, range the first candlestick to the last candlestick within that time frame. With that being said, you have a daily range right here. This candlestick, this green candlestick, I'll move this over. This green candlestick right here, that is 24 hourly candlesticks. And let's do the math. So 24 divided by 4 is what? On the 4 hour time frame right here. That means that there would then be 6 4-hour candlesticks within that time frame. 1 hour, that would be 24, and 30 minutes, that would keep going all the way down. You can do math yourself. But trading, like I said, moves off price and time. This is your x-axis for time, and then your y-axis for price. Think of this as charts. Think of it as this is your independent, this is your dependent throughout that time right here. So your time will also push price up, and the amount of buyers and sellers within that time will cause price to move up and down along this y-axis right here. So third definition is fractal. Repetition within a particular time frame on a larger scale. So with that being said, remember how last video I had pointed out what fair value gaps were. Indication of buyers and sellers within the market. So boom, we have a fair value gap right here. This big block. Let's go and highlight this so you can see on a smaller time frame. So these blocks right here, the tip, bottom, the top tip, which is the bottom of the fair value gap, and the bottom wick of this candlestick, which is the top of the fair value gap. Price pushes into this gap, immediately shoots up, cause the price to run up. So with that being said, we're going to then scroll down into a smaller time frame to show you what that gap will look like. So move that. So now that we are scrolled in, this is what your gap looks like on the smaller time frame. And as you can see within that time frame, there's another gap causing the price to push up to causing the low of this fair value gap. Every fair value gap created, high and low fair value gap, will wind up being another fair value gap, which is an entry on a smaller time frame. With that being said, as you can see, we have this low right here. These highs, which is technically the low of the daily fair value gap, which in then return is also the same thing as the range. So you see how all these definitions work within each other. And yeah, so that is what would then be called your range and your fair value gaps, and also your fractal price movements. All right, so let's get a deeper dive into session timings and everything else in the market maker when the market maker models start. So I'm not gonna write this one down because it's not really important, but if you want to just get real fancy with the terminology, market makers open and close markets within certain times, and also allow price to stay in the same range and be stabilized within that certain time. Or whatever, if they wanted to run it up, if they want to run the price up, they can run it up. If they want to spike the price down, they can spike it down as well. But just know within a certain time frame, price flows. So to get in deeper dive of that video or of that, there are three session time frames where people like to trade the most and also provide waves in the market. Remember, the market always moves in waves. So first up, we have your NYC session time. NYC session. NYC starts between, some people say it depends. Some people say 7:30 for Forex time, but because we're trading futures, I'd like to say NYC starts at 8:30. So we'll do 8:30, and it also ends at 4. So NYC times in at 4, and in between there's also called lunch. So this is your whole PYN or NYC session, but then it's broken down into two smaller sections. So your smaller sessions would then be called NYC AM, which is also 8:30 to 12, and then your NYC PM, which is from 12 to 4. These are your time frames right here, and for your NYC, this is just one session timing right here. Your one session timing. This is the main session. This is the session I trade. There are whatever trading style fits you, whatever session fits you. That's what I like to say is something that you got to figure out for yourself. This is why I say that these videos are meant to guide you along your path, and you got to find yourself within this journey and know what works for you and what does not work for you. So this is personally what I like to trade. These are the time frames right here. And actually, if you don't like these, and there are multiple ways to trade, but yeah, these are the time frames right here: 8:30 a.m. to 4 p.m., 8:30 to 12 p.m., 12 p.m. to 4 p.m. So yeah, all my money's mostly made during that time frame, and after that, I'm done for the day. Can go about the rest of my day, do work, schoolwork, whatever I got to do, and yeah, keep pushing. The next session would then be called the pre-market session. Some people call it the AM session, London session. This is where, some people like to get a little technical and, But anyways, I'm going to break it down for the way I view the market, and this is what I call pre-market session. Anything before this, I just call it pre-markets. So this will be your then wire session from 12 all the way leading up to 8:30 a.m. And then this will be p.m. Just think of it a.m. And think of it as the day starts at 12, right? So when the day starts at 12, it's technically morning time, and that's when your 24-hour clock rotation then begins. So these are the time frames that you are wanting to be trading on, and you see what works best for you. If you're an overnight trader and you want to trade overnight, look at that. just go. I wouldn't recommend to put any trades right now because I will show you that place trades in the next video. But this right here, just time frames that you want to be looking at and that you want to be paying attention to and just studying. So your homework today is to go back within the charts and see how these time frames are working with and against each other. Notice how the market moves in waves, goes up and down when you are looking at these time frames. So that's it for this video. I hope this was very informative. Comment down below wherever if you had any questions, or get my Instagram if you had any questions, and just share the content. The more we keep running it up, the more I'll be able to keep producing more videos. So without further ado, Cook Trades out.